Good morning, everyone, and welcome to today's webinar. My name is Alex Paul from InvestorStream, and I'll be your host today. Today we have Sacgasco Managing Director Gary Jeffery and Philippines Asset Manager Marshall Hood, who are going to provide an update on the company's strategy for the recently acquired Philippines assets as Sacgasco plans to accelerate drilling preparations for 2022. Following the presentation, both Gary and Marshall will be available to address any questions submitted. Now, the focus of this webinar will be on Sacgasco's assets in the Philippines. However, if you have any questions pertaining to the company's other operations in Canada or the Sacramento Basin, feel free to send them through. I'll just address them at the end. You can download a copy of the presentation via the handouts pane in the GoToWebinar control panel. Otherwise, it's also available for download from the ASX platform. And a replay of the webinar will also be available on Sacgasco's website and social media platforms later today. But for now, I'd like to throw it to Gary, who's going to kick things off for us. Gary, the floor is yours.
Thanks, Alex. Appreciate the opportunity, and welcome everyone to the webinar. I'm just going to take a couple of minutes at the front end here just to, well, effectively do an elevator pitch. And the first slide that Alex will throw up is a 3-point slide, basically, that we've got some great oil and gas assets in 3 operating domains now. 12 months ago or so, we were singularly focused on California. We've got a good underpinning of acreage to explore, and we're looking to expand our exploration in all 3 areas. All 3 areas have good contracts, either royalty or very attractive service contracts. Our discovered reserves underpin the growth strategy for the company, and we look for control through operatorship or the high working interests or aligned and proactive JVs. And the idea is to accelerate cash flow to underwrite activity, and we'll come back to that later on. Now, the key point to take away here, in my mind, is the unrecognized value. What I've put here is our market cap per flowing barrel of oil equivalent per day, which is a key metric in the M&A. Sorry, I've got A&M there, but merger and acquisition transaction value is dollars per flowing barrel, and that's US dollars 18,000 is our market cap per flowing barrel. Now, if we go to someone like ERC, who published these numbers, in the 4th quarter of 21 was averaged $42,000 US per flowing barrel. So you can see we're way undervalued in that comparison in itself. Also, the market cap per 2P reserve is $3.60, which is also way undervalued. Sorry, I wasn't able to pull a statistic out in time for this. Now, I expect that the ERC will update their numbers for the 1st quarter of 22 soon, in the next few days, I expect. And I expect those numbers will be even higher still, given the high oil prices. Offshore the Philippines, low risk, high volume exploration and development, 3.6 million acres, and a number of discoveries in the Palawan Basin. So it's a proven petroleum province. We're sitting on a number of discoveries that we can develop or redevelop. We're aiming for a 2-well drilling program at Nandino and Cadlao, and we've been carried on Nandino. And we've just secured 2.9 million Aussie of funding to accelerate that drilling program. Now, Philippines offers the best fiscal terms in Asia. Everyone knows that. And we're looking for low capex development strategies and opportunities, including the extended well tests, which are very attractive for cash flow. So there are multiple near-term cash flow generating opportunities and huge exploration upside. In Canada, solid reserves, oil and gas. We've got an aligned operator who thinks just like us, making cash flow go a long way. Our net production is 470 barrels of oil equivalent per day. Plus, we've of course got 45 barrels of oil equivalent per day coming out of California. We've just drilled three wells in the Alberta Plains assets. Those wells are cleaning up at the moment, and I'll report on those as soon as they've gone through the cleanup phase, but they're looking good. And so significant low cost exploration and production upside across all the assets. Particularly in Canada, where we've got proved underdeveloped reserves that we can bring to book. Now, I think this is all summed up beautifully on Monday by the Stockhead supplement in the Australian newspaper. It said it all. It had the top 4 sub $25 million market cap oilies, and we were one of them. And I think that just sums up where we're at. That it was an unsolicited, and we did not pay for that mention in Stockhead's supplement. So with that, I'll throw to Marshall to tell you a bit more about the Philippines.
Yeah, great. Thanks a lot, Gary. So as introduced at the start of the call, I'm the Philippines asset manager for Sacgasco, and I'll just take you through a little bit on the assets themselves. I've worked closely with these assets and the Philippines for a number of years now, and I've got a good handle and understanding of the potential here. So on this first slide, Sacgasco, through its acquisition of Nandino, now has one of the largest acreage positions in the Northwest Palawan Basin. It's also underpinned by some of the best fish school terms in Asia, and I'll touch a little bit on them in a bit more detail in a couple of slides. That in parallel with working with a very proactive operator and regulator in the Philippines, the Department of Energy, we see that there's an attractive operating environment to work with, and we're pushing ahead with activities with that forming the basis. There's also strong market dynamics. Everyone is aware of the current macro conditions and the oil price being on a big run, but maybe not so much aware of the market dynamics in the Philippines itself, where the Malampaya gas field, which has been the jewel in the crown for the Philippines in terms of its energy security and energy supply for Manila for the last 20 years, has come off plateau and is declining rapidly. And the Malampaya gas field sits in the vicinity of our service contracts, and it could provide be a valuable asset and opportunity for us in the future to tie back any future resources in through that facility. Our service contracts themselves, they range from shallow water exploration and development, service contract 54 and 6B. We've also got service contract 14C2. We're a non-operated partner there with local company Philodrill, the operator. That contains 2 discoveries as well. And then we have the large service contract 58, which sits out in the deep water. This is the frontier big hit exploration opportunity that sits within the portfolio. So 3 of those assets we operate, and we have high working interests, and that very much allows us to control the activity and control the pace and move forward with plans and activities in monetizing the opportunities that we see in the portfolio. Obviously, to do that, we need a team, and as a part of the transaction to acquire Nandino, we also acquired a highly credentialed and very experienced in-country office and team, including all the key personnel required to deliver the activities relating to drilling and ultimately production operations as we move down the track. Next slide, please. So the Northwest Palawan Basin itself, it's a world-class petroleum province. Almost 1 billion barrels of oil equivalent has been discovered. You'll see from the graph on the right-hand side that this is a graph of number of exploration wells drilled by year, and you'll see that during the 70s and 80s there was a lot of activity. Some of the discoveries in the Nandino portfolio were discovered as far back as the 70s. And that very much, that activity petered off as we got to around 2000, and there's been very little drilling activity since then. The only drilling wells that have been drilled, most of them, 4 out of the 5, have been drilled by Nido themselves, and all of them have been discoveries. So that's quite an interesting fact that there's a lot of potential remaining. This basin still has a lot of yet to find potential. It's very much undercreamed, and we see the opportunity to reinvigorate the basin through new investment. And historically, a combination of the size of the prize and oil price has very much stifled activity and investment from larger companies and the majors, which is not just common to the Northwest Palawan Basin, but it's been a common theme throughout Southeast Asia. But certainly the opportunity for the smaller guys and the mid-sized independents to come in and reinvest and ultimately mature the basin further along and ultimately monetize any new discoveries. Next slide, please. I touched a little bit on the fiscal terms. So these are the best fiscal terms in Asia. The contractor take sits above, comparatively, or above the rest of its peers in Southeast Asia. The service contracts themselves are based on a revenue sharing structure, which is a combination of cost recovery and profit oil. This is relatively common, especially with sort of the PSC style contracts that you'll have. It's just quite common throughout the world. But what's quite unique to the Philippines is that every service contract you're able to negotiate what's called an extended well test period. And what this does is it allows contractors to accelerate cost recovery, which is absolutely critical. One, for small companies that may not have large deep pockets for developments, but it also accelerates and allows you to de-risk a discovery prior to to full capital, large-scale capital investments. So this is an important part of moving forward in the Philippines for us, Sacgasco, given that we have some opportunities to move forward. And we're able to limit our upfront costs and capex requirements to be able to bring on fields onto production through an extended well test. Next slide, please. Since acquiring Nido last year, Sacgasco has obviously worked very quickly. The portfolio has a number of different opportunities that have been identified, and we've worked quickly to mature all of the opportunities and work through them to work out which ones are the top ranked prospects that we consider the top rank that float to the top initially for drilling. So those are Nandino and Cadlao, and obviously investors would have seen a lot of news flow over the last few months relating to these two opportunities. And they're very much the focus for us in 2022 as we plan ahead with drilling 2 wells, drilling the Nandino prospect first in SE54, which is up dip from several oil fields, discovered oil, and that's an exploration target which we're planning on drilling. And then once that has been drilled, we'll move the rig up to the north to the Cadlao field, where we have a redevelopment of an old field called Cadlao, which is a very low risk opportunity. It has historical production, which allows us to de-risk and understand the potential from a subsurface point of view as we move forward with the development for Cadlao. Looking forward beyond this year, there's obviously, as I said, numerous other opportunities in the portfolio that we're maturing. We have the West Linapakan A and B discoveries, which we're maturing towards drill ready status sometime next year. We also have the East Cadlao prospect and obviously some big hit exploration opportunities in the portfolio as well. So this isn't just a single roll of the dice. We have multiple prospects and opportunities in our portfolio, and we're going to move forward with refilling the hopper and moving forward with activity in the next 12 to 18 months. Next slide, please. So just a little bit on the Nandino prospect itself. As I mentioned, it sits in service contract 54. Nido is the operator. We currently have 72.5% interest, or Sacgasco does, through its two subsidiaries, Nido and Yilgarn. And we've identified the Nandino prospect. It sits immediately up dip of the Tindalo oil discovery, which was originally drilled by Nido some 15 years ago, and it's a similar reservoir on trend with that with the Tindalo discovery. Similar age reservoir, carbonate pinnacle reef, and we see some material volume upside up dip of Tindalo, and also in an upside case the potential for it to be in communication with the Tindalo structure itself. The volumes for Nandino have been independently certified by Risk Advisory, and the mean in-place volumes are almost 100 million barrels, and chance of success that Risk are giving are 25%. However, management's view, given its proximity to Tindalo, that chance of finding hydrocarbons and oil in this prospect is significantly higher, well above 30%. In the event of a discovery at Nandino, there is the possibility to look at cluster development options that may include Tindalo, and also discoveries further down dip, ecal, which is a few kilometres away. And obviously, given the shallow water depths, the capital requirements are significantly lower. In terms of the activity and where we are with Nandino, we've submitted a prospect and drilling proposal to the local authorities, the Department of Energy, for their approval, and we're working closely with them to get the approvals in place that we will need over the next couple of months to move forward with firming up a drilling sequence and ultimately a spud date for Nandino later on in the year. There's a huge amount of activity work going on in parallel with regards to preparations for drilling, including securing drilling equipment, and ultimately finalising the subsurface and the drilling location, which we're hoping to finalise later on this quarter. From a commercial side of things, we've also, as Gary touched on, we've secured a 2-for-1 farm out with Blue Sky. They'll be carrying 100% of the Sacgasco's cost net exposure to the well. So commercially speaking, it's a very attractive opportunity now for the company that we're essentially fully funded for the well. Next slide. On Cadlao, so as I mentioned, the first drilling target is Nandino. Then we'll move the rig up, use the same rig to move up to Cadlao and conduct an extended well test, a single well extended well test on Cadlao. Now, Cadlao itself was discovered back in the 1970s, so it's a very old field. It produced around 10-11 million barrels over 10 years through the 80s and early 90s, and then was shut in due to commercial reasons. Since then, there's been a 3D seismic shot and further reservoir studies, and what we've been able to identify is a significant unswept attic oil volume up dip of the old historical producers, and that's very much going to be the focus for the Cadlao redevelopment and ultimately the early extended well test that we're planning on doing later on this year. So the contingent resources have been independently certified again by Risk Advisory, and the 2C estimate, gross estimate, sits at around 6.2 million barrels. And these are high value barrels. They're de-risked from the production history, and it gives us an opportunity to fast track cash flow into the company as a part of our strategy, and ultimately take advantage of the attractive macro environment as it stands. The field itself is in shallow water, so again, similar to Nandino, we're able to limit our development costs and capex costs, given that it's in shallow water. So In terms of the near-term plans for Cadlao, very much in parallel, working closely with what we're doing in Nandino, securing a rig in the coming months. Obviously, also long lead items. We're in discussions with opportunities to secure the equipment that we need. We're planning on doing, hopefully having that secured later on this quarter. We've obviously also working closely with the joint venture and also the Department of Energy to get the approvals in place, similar to Nandino, to be able to move forward with drilling. Obviously, the plan is to drill Cadlao later on this year and ultimately bring the extended well test on immediately, and that obviously then will facilitate and help us optimise the full field development, which will look to submit a POD, a plan of development, for the full field after we have the results of the extended well test. Next slide. On service contract 58, so this is the deep water exploration opportunity that we have outboard of Malampaya. This is a large block, over 13,000 square kilometres. It covers a highly prospective deep water extension of the Northwest Palawan Basin. It remains undrilled. We have a 50% participating interest. The service contract, though, is under moratorium at the moment due to the 9-dash line and West Philippine Sea dispute with China. However, we see significant technical opportunities in this asset, and we're going to continue to move forward with maturing the subsurface and also work closely with the authorities to find a resolution that we are able to lift the moratorium and ultimately move forward with drilling plans for SC58. Obviously, given the proximity to Malampaya, there is a lot of opportunity to in the event of a discovery, to tie back and utilise those facilities, third-party facilities, to monetize any discovery in the future. So the Ballina prospect, that's the top-ranked drill candidate for SC58. And that's currently our number one candidate. And as I said, we're moving forward with our resource assessments and evaluation throughout this year as we work forward with hoping to lift the moratorium in the near future. Next slide, please. So then ultimately, I've talked sort of very high level and a very quick look at the activities in the Philippines and what's going on in the near term, and ultimately that leads to a huge amount of upcoming news flow that the investors can expect to see over the coming months. I've touched briefly on the drilling preparations that we have for both Nandino and Cadlao, and ultimately there's a huge amount of work and engagement with contractors at the moment to work through and to start planning and preparing for drilling as quickly as we can. Obviously, the key part of this, and this will be something that we are very much focused on this quarter and moving into the second half of the year, is securing a drilling rig to be able to deliver the 2-well campaign that we're planning on doing. So the other two assets, we've talked about SC58 and obviously that being under moratorium, but we're continuing to do the subsurface evaluation, and Westland and Packen, obviously we're a non-operated partner there, but we're working closely with Philadrill to look at the redevelopment opportunities of the two discoveries there in Westland and Packen A and B. So the key message really is that there's a huge amount of activity going on. It's foot to the floor with planning and moving forward with working with the local authorities and the local stakeholders ultimately to get the approvals in place for us to hit our ambitions of drilling later on in the year. So yeah, and so that's really pretty much all I wanted to touch on the Philippines. So what I'll do is I'll hand back over to Gary, and I think he just wanted to give everyone a bit of an update on North America. So thank you.
Thanks, Marshall. Well done. Just once there were a couple of seconds on each of the Canadian and Californian assets. Canada, these numbers have already been published. We're doing around 472 barrels of oil equivalent a day net to us. 86% of that is oil. Current gas prices in Canada are around $8 Canadian, which is roughly $8 Aussie. And the oil price is $130 Canadian. So very, very attractive for us up there. Secondly, there are a lot of approved undeveloped reserves that we can drill up in that area. Plus, there is exploration upside, and we've got an exploration workshop lined up in the next couple of weeks with the operator. And we have a very, very aligned operator with us in terms of philosophy. So we're in great spot there, and lots of opportunity. Next slide. In California, we're frustrated, like all shareholders, with inability to get more gas into the pipeline so far. But you can be assured that we're working actively on that. We have 3 different approaches in mind there. Turn the molecules into electricity, or turn some of the molecules into hydrogen to supply the hydrogen highways and filling stations that exist in California, which is one of the most advanced place in the world for hydrogen filling stations. But the upside there in California is that today's gas price is over $13 or around $13 Aussie an MMBTU, or roughly an MCF. So we continue to work in that area, and we see a lot of potential in both areas in North America. So throw it back to you, Alex, for questions.
Thanks, Gary. Thanks, Marshall. Look, the first question I'd like to address to you, Gary, straight off the top. You've mentioned your intention to commence drilling in the Philippines this year. How confident are you of hitting this time frame, considering we are nearly halfway through the year? Gary, can I just get you off mute to answer that question for me, please?
Yes, sorry about that. Let's not wish the year away too quickly, Alex. It's only May. It goes fast enough without wishing it away. But we do recognise the tightening of the oil field supply chains worldwide. But we expect to be able to secure a drilling rig in the near term, and relevant drilling equipment and key contracts, as Marshall alluded to in his presentation. 2022 drilling is very, very firmly in our sights, and then that's what we wish to do, and that's what we're doing everything possible to achieve. You will have seen this morning, some of you, that we released on an alliance with a very experienced group of people in Asia who've been involved with a lot of the testing on the Philippines areas, and a lot of extended well tests and small field developments. And so we're putting a team together to make things happen early on. One of our neat solutions, we believe, once we were able to announce on a drilling rig contract, is that we think we'd be able to package a lot of things up on the drilling rig to minimize our supply interruptions, minimize our costs, and allow rapid response to results, success at Nandino, rolling into a EWT, extended well test, and then rolling on to Cadlao for an EWT, drilling and then an EWT as well. So it's a firm objective, and I feel confident we'll be able to make it this year.
Thanks, Gary. I might throw the next one to Marshall if I can. Marshall, drilling proposals have been submitted for the Philippines Department of Energy, as you mentioned, for Nandino and Cadlao. Can you just outline what approvals are still required for the drilling program to take place, and an indicative time frame? And I guess further to that, are there any environmental approvals or any other regulatory approvals that are still required?
Yeah, thanks, Alex. Good question. And I guess we're working very closely with the authorities, as I mentioned during the presentation, to gain the approvals required to undertake both the drilling but also the EWT and production operations. And that's for both Nandino and Cadlao. And the approvals that will be included are things such as budgets, well engineering and design, site surveys, production operations, health and safety, and also environmental approvals, as you touched on, including EIAs and ECCs. So it might sound like a lot, but this is fairly standard procedure and ultimately oil field practice. So, and not just for operations in the Philippines. So, I think we've got the right people helping us. As I said, a very experienced in-country office who have been working with the local authorities and stakeholders for many years. And they've got an excellent working relationship with them and a track record of delivering this stuff. So, and that's ultimately operating under the NIDO banner, which, reputationally has done very well in the Philippines historically.
Thanks, Marshall. I might just address the next one to you as well, given that your experience in the Philippines, you've been on the ground there quite a bit. In your view, how does the Philippines election and the result potentially impact the drilling program plan for 2022?
Yeah, good. I mean, the election in the Philippines is on Monday, this Monday coming, the 9th of May. So both of the leading candidates are expected to be fully supportive of any energy security policies from what we've seen. And that ultimately relates to oil and gas reserves and activities, and that flows down, and that's the feedback that we've been getting from our local in-country manager, but ultimately from the Department of Energy. So in addition to that, the Department of Energy have published their energy outlook plan, which goes right out through until 2040 for the Philippines, and that very much highlights the need for domestic supply and long-term energy needs. So it is very much a topical point in the Philippines at the moment, and I think that as I said, both of the leading candidates are expected to be fully supportive of energy security policies.
Thanks, Marshall. Now, Gary, has there been any progress in securing a farming partner for Cadlao?
Obviously, if we had secured it, we under continuous disclosure, we would have released it. But it's a work in progress. The primary focus at this time is preparing the drilling campaign, and but in parallel, we're continuing commercial discussions for funding, both debt and equity, and farm outs are also being sought in parallel. So it's a work in progress. We're confident that we have multiple solutions. It's just a matter of deciding which ones provide the right risk-reward balance for Sacgasco and its subsidiaries, Nandino.
Thanks, Gary. And I'll just keep the next one. I'll keep this next one with you if I can. Is the plan to drill Nandino first and then Cadlao, or vice versa? And can you just talk us through the strategy behind that?
Definitely Nandino first, as part of a 2-well drilling program, and we obviously plan to use the same rig to drill both assets, given that they reside in relatively shallow water depths. The strategy is obviously Nandino is a bigger prize. We know our shareholders like bigger prizes, and that's the reason why we're looking to review the exploration potential in country, so that we can keep the rig occupied and get progress quickly for our shareholders in realizing the value that we see in the Philippines.
Thanks, Gary. Now, Marshall, you talked about SC58 in your presentation, and it might be worth just reiterating as part of the question that you may have already answered it, but is all of SC58 under the moratorium or only part of it? And I guess if that is so, is it possible to drill SC58 with the moratorium in place? I.e., could Ballina or the area around Malampaya be drilled in the next few years?
Yeah, so yeah, just to clarify, yes, the entire service contract 58 is under moratorium, as I mentioned, because of the West Philippine Sea dispute with China. It has been under moratorium for several years now. We're working closely with the DOE to put together a framework for lifting that moratorium in the near term. You know, however, ultimately it's a political decision, and it will be out of control of the service contract holders, which is ourselves and PNOC, the National Oil Company. But as I said, we're in active discussions. We obviously see a significant amount of exploration potential, subsurface potential in the service contract. So it's very much on our radar to do everything in our powers to facilitate a resolution so that we can get out there and drill the big opportunities. But for the time being, it's in moratorium and it will be until there's a resolution.
So Marshall, are you looking at acquiring further exploration targets in the Philippines or Southeast Asia more broadly that give big bang for buck?
Yeah, short answer, yes, absolutely. You know, the Philippines, as I said, I've worked in the Philippines for a number of years. There are a lot of opportunities, exploration opportunities that exist, both in our existing portfolio, but also elsewhere. The Northwest Palawan Basin is, as I mentioned, is heavily underexplored and under mature. So absolutely, given our activities and our focus on the Philippines, pursuing targets, you know, securing new exploration opportunities, but also potentially M&A targets in the Philippines is very much on our radar. And we've got, you know, open dialogue at the moment with many other of the service contract holders about opportunities, both with collaboration, but also farm-ins and farm-outs. Maybe Gary, did you want to touch a little bit on the rest of Asia?
Yeah, exactly. Thank you. Like Marshall, you know, I've got a lot of experience. I first worked on Filipino exploration in 1973, my first role as a worker, and you know, it's a very attractive area across the Philippines and Asia, Southeast Asia in general. And we're always on the outlook for undervalued assets and opportunities. We will do a full review of the Philippines for exploration opportunities on our existing acreage and new plays. Marshall's has got lots of ideas. I have a number of ideas, and other members of our team who have worked at will also have ideas as to what we can do. Part of the logic there will be that if we can get a rig in country, as I said earlier on, we will want to try and keep it in country. Blue Sky, as an operator, has been operating in Indonesia, is a named operator in Indonesia, in fact. So they see opportunities and review opportunities. And we work closely together, them as you will gather, both in Canada, in the past in California, and also through Asia. So, yep, always on the radar. And if anyone's got ideas, send them our way, and we'll review them and see if they make sense.
Gary, what's the reason for the SC6B FIA still not being approved by the Department of Energy? Is there anything holding up the approvals?
No, the farming agreement for Cadlao is still being processed by the DOE. Obviously, the election slows things down a little bit, you know, coming up and right around the election. We've been working closely with them to understand if there are any further requirements from our submissions, and we expect approvals to take place soon after the election. You know, the standard approval process usually takes a couple of months, and we've only just put the farm-in agreement for approval in April, and so yeah, you know, there's nothing untoward there that we can see.
So, Marshall, how can Sacgasco do any preparations to drill in SC6B if they're still not the operator on record?
Yeah, again, a clarification. It is a good question, actually, because what we were able to do late last year was Nido was actually appointed the technical operator by the joint venture. And what really that allowed us, Nido, to do was move forward with preparations and planning for the development on behalf of the joint venture. Now, Philadrill are still officially on record as the operator for the time being, until we get the approvals in place. But having a technical operatorship agreement with the joint venture essentially allows us to drive the activity and the planning for the drilling, while we wait for the relevant approvals before we officially become the operator. So, you know, it allows us to move forward on behalf of the joint venture while we're waiting for formal approvals by the DOE. And you know, it's allowed us to not sit idle for the last 3, 4, 5 months. It's allowed us to move forward quickly with activities at a joint venture level. And yes, it also demonstrates that the joint venture has you know, has a lot of respect for Nido being able to deliver this going forward.
So Marshall, I'll finish this one off with you, and Gary, you might be able to add as well. What are Sacgasco's funding plans for its Philippines activities?
I'll take this one, Alex. You know, to fund these things, we've always got lots of alternatives, and we've shown in the past that the company's been around since 2005 when it was first IPO'd, and has not gone through any reconstructions of capital. So it just shows that, you know, there's been good management of capital over those years, and we've been able to conduct a lot of activities and achieve a hell of a lot. And there's more to come, and I think we've got a great foundation for that. So we've got a combination of North American cash flow. You know, we've got opportunities for new equity. We have not ventured into the debt markets as such in the past, but you know, we are in discussions about well-priced debt, and debt with sensible requirements. You know, I'm not a huge fan of hedging because I'm an out-and-out oil and gas bull in terms of pricing, and you know, the world can't do without our products. So and we're not finding enough to keep the world supplied, so I can only see a general upward trend in oil and gas prices. And of course, farm outs, and we've shown in the past and just recently that, you know, we're able to do those on good terms. You know, our high equity position and operatorship in S6B gives the company flexibility to pursue all funding options. Additionally, as seen from the release this morning, we're working closely with strategic partners who are experienced in low-cost small field developments and drilling operations, and you'll see more of that, I expect, over the next short while. And so, you know, we're well funded for Nandino. We have a responsibility as operator of the service contracts in the Philippines to the country in whose half we operate, and that is to deliver the most optimal and cost-effective developments for monetizing their discovered resources. And so that's our aim. We'll work closely with the Department of Energy to achieve that, and to get the best results for the company and for the country. So with that, that sums up how we're going to fund this.
Fantastic, Gary. And just one final question. We've just had one come through, just shifting to the Canadian operations. You mentioned in your presentation the net production of 472 barrels of oil per day equivalent coming from Alberta. Can you just touch on what the profit margins are from that?
Yeah, as I said, the oil price is around $130 Canadian. And I think the Canadian dollar is about 0.9 to the Aussie, so let's just use that as roughly Australian dollars. Our operating costs on both areas are around the $30 mark Canadian, and that's operating costs, not capex. So you know, there's a beautiful margin, you know, nigh on $100 a barrel of oil equivalent there for those operations. Now, obviously, you know, we turn some of that money back to capital investment to drill development wells to get the approved undeveloped reserves on stream, and even some of the probable undeveloped in this most recent drill campaign that we'll report on fairly soon once the wells clean up. And that's all going well. The guys did a great job geologically and drilling wise on that. So it's a very, we bought it at $40 or less than $40 oil because we saw the potential upside, and we're actively with our operator, just had a review yesterday of their plans to get the production up. And we're up already 50% on the year to date, and you know, I'd see us as having an objective to do that again before the year end by bringing wells back online, working over wells, bringing pipelines back into the operation, and even doing some enhanced recovery operations, because we've got a beautiful polymer flood plant there that previous operator spent something like $60 million on building, and we want to utilize that to increase our production as well. So lots of upside there, and you know, I think there's a lot of exploration upside. We've got helium in the gases associated with our oil. Ideally, what I'd like to see us drill is a deeper, they're not deep, an older, some of the older gas plays, and see if the helium levels are high in those gases as well as in the gases associated with our oil, which logically they should be, because the helium will be coming out of the basement. So you know, that's an upside opportunity as well. And we can also look at some of the wells to reposition them in the hydrogen space as well. So, you know, anything to do with natural gases we're interested in, and we see Canada, California, and the Philippines as being great places to be right now.
Fantastic. Well, that's all the time we have today. I'd like to thank both Gary and Marshall for presenting and taking the time to answer some questions. As I mentioned before, a recording of the webinar will be on Sacgasco's website and social media platforms later today. Gary, before I let you go, do you have any final comments to leave with us today?
No, I just not a lot. Just go back to the elevator pitch slide, which I think summarizes things very well. Add to that the context of the pricing that you know, we're seeing at the moment. Add to that you know, for what it's worth, is my bullish stance on oil and gas. You know, you've heard, anyone who's been on one of these before has heard me talking about this for what seems like years now, and so I see just a great upside. I don't understand our valuations, but you know, that'll all work through over time. So I recommend us as an investment to everyone, and with the normal provisos that I'm not qualified, you know, or nor have a license to give some financial advice. So get your own. Thank you.
Thanks. Well, that wraps it up for us here. Thank you, everyone. Have a great day, and all the best.
Thanks, Alex.